By the time we got to the early 1990s, we had an answer. Spreadsheets. This is a math problem, right? So I give you what would have been a classic retirement projection of the 1990s. I'm going to assume a 60-something-year-old retiree that's planning 30 years for retirement. We assume inflation averages 3% a year, which is what I've been doing for the preceding roughly 100 years. Stocks average 10, bonds average 5, which are their 100-year-long averages. So if I buy a balanced portfolio, it generates about 8% a year. So if I plug all these numbers into a retirement projection spreadsheet, I'll assume $1 million portfolio just to make the math nice and round and easy. I would have gotten a retirement plan that looks something like this. So the yellow line is your spending. Starts out at about $66,000 a year, creeps higher each year for inflation. Now, even 3% inflation adds up when you run it out over 30 years. So it starts out at $66,000 a year, ends out at $160,000 a year just to maintain the same lifestyle as inflation slowly chips away at you. The red line is your account balance. You start out at $1 million. You actually build a little bit of a cushion in the first half of retirement. You have to, because your $60,000 lifestyle is $160,000 by the end. So we build up a little bit of a cushion in the first half of retirement. We start spending it down in the second half of retirement, but we make it. The way all retirement charts like this were evaluated in the 1990s was really simple. If the red line makes it to the end, you're good. If the red line does not make it to the end, you have a problem. You have to move one of the 4 levers of retirement. Save more, spend less, retire later, die sooner. Any combination of the 4 and the chart looks better. And if you ran one of these projections and the red line started growing up to the sky because your returns were out compounding your spending, then you could take all the same levers and you got to move in the other direction. So now I could spend more, I could save less, I could retire early, or I didn't even need to worry if I'm one of those people who lives to be 120 years old because I got more than enough.